So here's a video showing my closed trades for the month of February in my margin account only, which is mostly put spreads. So I do this I started doing this in January, and so January was about 1200 US closed profits. Now February was almost a profitable month until yesterday, February 28th. I had to close a bunch of SPY put spreads that cost me a lot of money. So we're gonna see that right now. All right, so first trade here is Boeing. Open January 17th, closed February 5th. So about 2 to 3 weeks. Made a $33 net profit. So this is after commissions always. So it's a put spread that I expiring February 14 and I closed it February 5th for a $33 profit after commissions. DIA here, put spread as well. Opened January 22nd, closed February 11. This had a February 21st expiration, closed it for a $20 profit. So this one I was risking about $400 of capital. This one I was risking about $440 of capital. This one here was a put spread on Facebook, opened January 15, closed February 7. It had a February 14 expiration, made a $27 net profit, and the capital required here was about $425. And here's another put spread on Facebook with a February 21st expiration, opened it January 22nd. I closed it February 13 for a $17 net profit, and the capital required for this trade was about $440. This here was an earnings trade. I made a video about this, but here you can see I opened this February 24th, closed it February 25th, so 1 day trade. Made a net profit of $35, and the capital required for this trade was about $410. So these were other put spreads on IWM. So this one has the February 14 expiration, open January 15, closed February 5th, $16 net profit. The capital required was about $450. This one here had a February 21st expiration. I opened it January 21st, closed it February 11, and made a $15 net profit, and the capital required was about $450. This one here was on MasterCard, a put spread on MasterCard with a February 21st expiration. I opened it January 22nd, closed it February 4th, made a $25 net profit, and the capital required for this trade was about $440. So this here was the MasterCard put spread that I had opened. I opened it twice actually. These 4 lines here is when I opened the MasterCard put spread. I did one contract first, and then I added 2 more contracts. So my max risk on this here, I collected about $500 to open this trade. My max risk was $1,000. But then when the market dropped like crazy, these put spreads became in trouble. They were very deep in the money, so I was afraid to get assigned early. So I wanted to give them more time. I wanted to extend the time period, so I ended up closing them. So as you can see here, these 2 lines here is me closing these put spreads here. So combined, I lost $800 on these trades, but I moved it forward to April 17. So these 2 lines is basically what I collected from moving the trade forward to April 17. So if we add all these lines together, it gives me $400 profit, or not. It's not profit yet because these 2 lines here are not closed. They're still open. I don't know yet how much I'll pay to close them. If I pay only $200 to close them, then this whole MasterCard trade becomes profitable. But because I don't know how much I'm going to pay to close this trade, then I can't really say if it's profit or not. But this here is closed trades, and it's $800 loss. But this could be recouped if by April 17, MasterCard is trading above 325, then I'd be up $400 on this trade. But MasterCard has to be above 325 come April 17. All right. So now NVIDIA was an earnings trade, so 1 day trade. As you can see, opened February 13, closed February 14, made $52 net profit, and the capital required was about $420. This here was a put spread on the Qs with a February 21st expiration, opened January 22nd, closed February 6th, and I made $18 net profit. The capital required here was about $450. All right, so these here on the SPX, so this was done Friday, February 28th. So these are all open trades. They're not closed yet, but basically I left them because they compensate a bit the red entries that you see here, which was me closing my existing put spreads and just my existing put spreads on the SPY that were deep in the money, I closed them for a loss, of course, but I converted them to SPX just so that I avoid the risk of early assignments. So if you watch my previous video, you'll understand what I mean. So I converted my SPYs into SPX. So to convert my SPYs to SPX, I had to close my SPYs. So my SPYs were closed trades and obviously big time loss. And then my SPX, they're still open trades. So right now the SPX alone is showing 6,000 profit, but it's not really profit because I might have to close it for the exact same thing again. I might have to close it for another 6,000. So my real loss here is my what I paid to close the SPYs. So the only way this becomes a profit is if by March 13 the SPX is trading above 3280, which most likely is not going to happen. Right now the SPX is at 2900, 2950, and I need it by March 13 to be trading above 3280 for these to be a profit. This one here though, this is a new trade that I opened on the SPX alone, and you can see that the short put is 25.50. So this is brand new, but it's still open. Collected $273, but it's not closed yet, so I can't say that it's a profit. So that's why it's not included in the calculation. So all these are open trades. This one too is still open. So the ones that don't have an amount next to it over here is because the trade is still open. Cannot confirm if it's a profit or a loss. All right, so if you go back to the SPY here, I've got this one here with a February 14 expiration. Opened it January 15, closed it February 5th, $23 profit, and the capital required was about $450. This one here had a February 18 expiration, made $17 net profit, and capital required was about $450 as well. This one here, same thing, February 19, made $17 net profit, opened January 21st, closed February 6th, and capital required was about $450. This one's very similar as well, another $17 net profit. So over here you could see that I was doing one contract only, so 5-point wide spreads. Here I started adding into contracts. I started doing 3 contracts, so the net profit increases and also the commission gets diluted as well. So this one here is February 24th expiration, open January 24th, closed February 10th, made a profit of $54. And actually it's a good thing I closed it February 10th, because if I had held on to it, this one would have been a complete loser, because by February 24th the market was way below 323 short strike. All right, so this SPY here shows 54 profit. This one here, open January 24th, closed February 5th. On the February 26th expiration, made a $56 net profit. The capital required here was $1,350. This one here made a $91 net profit. The capital required was about $1,300. This one here made an $83 net profit on the SPY put with a March 2nd expiration. Capital required was about $1,300 as well. This here's an $86 net profit. Capital required was $1,285 of capital required. That was my max loss basically. This one had a March 4th expiration with a 310 short put. This one here showed a $71 net profit. March 6th expiration. Capital required was about $1,320. This one here showed $74 net profit. Capital required was about $1,315. This had a 321 short put. I opened it February 7th, closed February 12th, so 5 days only, pretty good, with a March 9th expiration. I like these kind of trades. This one here shows a $77 net profit, March 11th expiration. Open capital required was about $1,315, and this is open February 10th, closed February 19th, so 9 days, pretty good. All right, so this here, as you can see, they're not put spreads, they're call spreads. So these were call spreads that I opened when the market tanked, and I opened this one here at 328 strike. So this one goes back to the, so you see this here, this is a put spread that I opened February 12th at a 328 strike, and then the market tanked. So what I ended up doing is I opened a call spread at the same strike. So worst case scenario, if the market comes back up, I cannot lose more than $5 minus the credit that I received from the put and the credit that I received from the call. So when I sold the call spread, when the market tanked, I collected $260. And when the market continued dropping, I ended up closing the call spread. So my net profit on the call spread that I opened for hedging was $161 against this put spread here that, as you could see here, I lost $1,300 on. So this 160 just helps me reduce the loss on this one here, which is still open because I transferred it into an SPX over here. So this replaces the SPY put that I closed over here for $1,300, but who knows what I'm going to close it at because it's still open. But this call spread that I close for a profit helps reduce the max loss on these put spreads. And I might sell another one if the market opens at around 298 next week. I might sell another call spread at the same strike at the same expiration. Actually, no, I won't, because I already sold one. I already sold it on the SPX. Here it is, yeah. So this is a call spread that I sold on the SPX March 13, yeah. So I'm not going to sell another one. All right, this here's another call spread. Same idea. March 16 on the existing puts over here that generated a loss of $12.91. I sold a call spread at the same strike of the put, and I closed it for $50 profit. March 18 call spreads, same thing. Closed it for a profit of $95, and this was just to mitigate the put spread that I had over here at 326 when the market was trading below 300. I ended up selling a call spread at 326, 331. Collected $140, but I closed it for $45, so my net profit is $95, and this just helps mitigate the $12.58 loss that you see from these put spreads that I had to close, because I converted them into SPX to avoid early assignment, because SPY puts can get assigned early, but the SPX cannot get early assignment. So this is another call spread, same idea. I opened just to mitigate the max loss on the put spreads, $53 net profit, and helps mitigate the $12.61 loss here. And this here, another call spread as well. This one I closed for $128. This one was for this put spread here, but this put spread is still a SPY put spread. So this trade is still open. I didn't convert it to SPX because I felt like 325 is still okay for March 23rd. So I didn't close it yet. So this one's still open, but I did close the call spread that I sold against it to mitigate the risk. And I might open another one next week, depending on where the SPY is. This here's another call spread that I closed for a profit. This was for this SPY put spread over here. March 25th expiration, 320 short put, did the same thing. Sold March 25th expiration, but 320 short call, and I closed it last week for $236 profit. So this helps mitigate the potential future loss of this put spread. I don't know what the loss will be on this one because the trade is still open and I still have until March 25th. These ones were closed once again because they were deep in the money. They could get assigned early, so to avoid early assignment I closed it, and then I just switched it to SPX because SPX do not have early assignment. They get settled on the last day. SPXW gets settled on the last day. SPX alone is actually settled 1 day before expiration, so you have to be careful with SPX. So if you want to close the trade early, on the SPX alone, you have to close it before one day before expiration. It's settled in the morning, so you actually don't know what it's going to close at. But the SPXW is settled in the afternoon, so it acts like the SPY. And then whatever it closes at, if your options are in the money, you're going to get cash settled. And if your options are out of the money, they're going to expire worthless. All right, so the rest here, they're all open trades. They're not closed yet, so I'm not including them. These are all SPY put spreads. As you can see, they have different short strikes. Some of them are safer than others. And I also have some call spreads that are still open. And some of these call spreads are done to mitigate the existing put spreads that are sort of in trouble. And they can actually get all in trouble if the SPY just drops even more next week. And this here was a put spread on win, net profit of $27 open January 29th, closed February 3rd, $27 net profit, February 28th expiration, and capital required was about $410. So if you look at the profit versus the capital required, the return is pretty good, especially in the number of days. But of course, I'm losing a lot of money on these put spreads after the market tanked. Now, of course, not every day the market tanks like that, but that's why put spreads work, because over the long run, the market doesn't tank like that. Over the long run, the market usually goes up steadily, and put spreads gives you room to make money. Even if the market drops a little bit, as long as it doesn't drop below your short put, you could still make money. But of course, when the SPY drops from 338 to 386 in 1 week, then whatever you do, you cannot really make money with the put spreads unless you start selling call spreads. But then you had to predict that the market was going to drop. So if we include everything that I closed, okay, even if I rolled it forward, and I don't know what's going to happen in the future, but if I include everything that I closed for February, I lost $4,230 US. If I don't include the crazy buy spreads that I had to close, so filter on color, keep green only, I made $1,676 profit US dollars in closed put spreads for the month of February. That's if we don't include the SPY put spreads that I had to move forward because I was afraid to get assigned early. So you could see that I actually lost a lot of money on these SPY put spreads just because of the market that tanked. Now there's still hope, very little hope, But the only hope I have is that, first of all, SPX reaches 3280 by March 13 or something close to it. And same thing for MasterCard. But usually if the market goes up, MasterCard goes up. MasterCard needs to reach 325 by April 17. So there's hope, but it's really, really slim. All right, so that was my P&L for February. So if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.